What is going on, everybody? JPA Trades here. Gonna be going over some more SPX plays for you guys, kind of what I was looking at when I took them, and just kind of help to give you a little bit of education on what I'm seeing, what's going through my head when I take these plays, and why they do or don't work. So with that, if you don't mind leaving a like on this video, it means a lot. I've been trying to really put the content out for you guys. So yeah, a like would go a long way, and I'd really appreciate it. So let's get right into it. So what I'm gonna do is I'm gonna do two plays for this. I'm gonna do our more intraday swing that kind of went from the mid morning until later in that, not even later in the afternoon, just about the middle of the afternoon, and then we'll do the crazy kind of last 1 or 2 minutes of the day option and what you kind of want to look for there. So, first play, this was a good one. So, bought the 38.50 calls for 95 cents. And I always say mega lottos with these because, not that I don't trust you guys, but you really got to size appropriately with SPX because you just, it might work, it might not work, but when they work, they really, really work. And when they don't work, it's usually a slow burn down. This is one of them along the way that theta was really kind of, if theta wasn't involved, this play could have been huge. It could have went from like 95 cents to over $10. But the theta on, what was this, the 30th was just, we had that spike down, which made the premiums cost more, which you really got to pay attention because this went up about, I don't know, over 60 points, and it was only to $4 from 95 cents, so it really should have got more. But let's go look at the chart and what we saw. It's always just the basic view, and you can use the candlesticks to kind of see where your supports and resistance are. So here's our buy, literally 10 o'clock, right at the bottom of that candle. And if you look at this view, you're saying, how the heck did you see to buy that? Because here's the time, 9:57. Here's the bottom of that candle, 10 o'clock. So looking here just today, you'd say, why would you buy that? So what you got to do is zoom out. And what we see over here, well, on the 23rd, we had a low. Just go up there, look up the top right here is where the lows are going to come in. So here's our low candle, 37.43. Well, what's our low candle over here? 37.38. So within 5 points on a $4,000 ticker. I know this is an index, but tickers are tickers. So here's our bottom. So what you want to do is you don't want to get too caught up and go what's going on in just the day. You want to kind of take a grand look at everything and see where are some potential spots for dips, where are some potential spots for resistances. There's kind of supply and demand zones is also another way to look at it, and I put a video out on that. But you can just, simplest terms, supports and resistances. Obviously, there was a support here that caused it to bounce previously, and it shot up after it tested that bounce. So what did I do? It made that low again, and I didn't buy the perfect low. I just bought the low of the candle. So I bought like 37.44, essentially exactly what this level was. The low of that candle is where I bought here. So did that buy. And then it took a lot of, so we had such a huge drawdown that the premiums were already in the contract. So I think it was up 20 points here, and the contracts were still red. It wasn't until it did that rocket up towards 3,800 that we really started seeing those contracts to move. And then here's this 12.30 top, and what do you think I did at 12.30? I think I have it saved here. Also mentioned SPY. I'll go back and mention that in a minute. I'll just open it here. So quote tweets, all out 12.27. So 12.27. Here's this candle at 12.30 and the 10-minute candle, all out. So why'd I exit there? So same thing again, right in this zone. Here's one of your demand zones where people start selling out. So just started seeing that resistance. The premiums were already high enough in the day. Might have got a little bit lucky with timing, but 38.11 right there, 38.19. Here's this right here, this high 38.18. Let's look at this one, 38.22. So within about 5 points again of those candles where it starts getting tight. So no reason, especially on these end of day one, these single day ones, you don't really want to push the envelope too hard. If the premium's lower, you can kind of wait, but we had 38.50s, it's 38.20, it already cost $4, and we're already starting to eep into the afternoon. It's only a few hours left after it just shot up 100 points. So once your money's there, just take your money. So it did that, it dipped down, it bounced back up, but on that next bounce up, since it's SPX and these are such a volatile ticker, it was essentially back down to $2, and it never saw anywhere close to 4 again, even after it came back again to end the day. And I also tell you guys that you can take SPY calls at the same time as SPX. I'm going to show you kind of what I'm seeing here. So here's SPY, here's SPX. Just do SPY. So same exact pattern, same exact drawdowns. It's essentially just 1/10, but it's a little skewed. Like when SPX is 3,800, SPY isn't exactly 380. But you can use them to go back and forth. So if I'm taking SPX calls and you don't have the ability to take an SPX call, or you don't have the comfort level to take an SPX call, you can essentially take whatever SPY call you want and mirror that move. And then just the same thing. Your percents change might not be higher, but your wicked volatility that you'll see in SPY will be less than SPX. So if you kind of have a lower risk appetite, you can take SPY calls, and you can do more time, less time. Just understand that your premium move is going to be less in SPY than SPX. But same exact dip happened, same exact bottom happened, same exact top happened. So SPY and SPX are the same thing. You could I would practice with SPY if you're not comfortable with it, because just your volatility, your shakeouts are going to be a lot less. You're not going to have such a wobbly scenario or be inspired to chicken out. You're going to feel pretty, it's just slower paced is probably the best way to say it. But SPY, SPX, same exact chart, nothing fancy, nothing to be scared about, just something to get used to. So back to SPX. So when I'm looking at the last minute of the day, let's just look at a 1 minute chart. Here's the end of our day on Friday, where you get these crazy wicks that happen. And all you need is a small drawdown. So what you want to do, here's that 500%, is you can just put you want to look for where it's topping out at. So initially when I bought on a pivot point again. So I bought one set of calls here for like 50 cents or 45 cents, and it broke through and just rocketed up. But then I saw these repeating tops that it appeared at 38.30. So there's 38.28, 38.29, 38.29.82, 38.29. So on this candle here, near the end of the day, that next jump up to 38.30, I took my chance and bought puts, the 38.15s, which you saw here. And I bought them for 35 cents. And then just that 1 minute drawdown candle happened, and they were higher. They went all the way up to like 2 something, but I had my order in at 1.9, and it just sells you out because you have an opportunity. These are the highest risk. Almost just not stupid, but you really, really need to have a good grasp of what you're getting into, or at least be very comfortable with what you're willing to lose, because it's a $4,000 stock, like I said, and if it moves 1%, that's 40 points in a direction. If you're able to get a $10 out of the money call for 20 cents and it goes down 40, you could have a 20 cents to $30 move, which is just insanity. But in the same regard, if it doesn't move, you don't want to buy a $1 call at the money and then watch your $1 like evaporate in a second and just be out of luck. So look for those repeating resistance points, look for those repeating support points, because there's nothing fancy. It's mostly about, can you size your positions correctly so that you're not getting shaken out by these wicks up and down? Do you understand what the possibility is for how high or how low it can go? So with that, I think that's a pretty good. If you have any questions, feel free to put comments either on Twitter, if you put them on YouTube. I'll try to get to them as much as I can. And then once again, just want to say thank you for everybody for all the support on YouTube. I know I've been trying to be a little bit more active, trying to put some content out that I just like. I know you guys really have been liking the SPX, so I'll try to keep focusing on some SPX videos. I personally kind of fell down the Pokemon card rabbit hole. Thought that's kind of an interesting thing to try out. But if you, whatever other kind of content you want to see on the channel, just feel free to put a comment on this video. If you don't mind, leave a like again. And thank you very much. Have a great weekend. Enjoy your holiday.